This is Gerardo Del Real with Resource Stock Digest. Joining me today is the president and CEO of one of the more compelling gold speculations in the entire resource space. I'm happy to have Mr. Hugh Agro from Revival Gold with me today. Hugh, how are you?
Oh, so good to be with you, Gerardo, and happy to hear you pronouncing your name with that with the right tone to it. Yes, good to be with you.
Every now and then I open the door to my Anglo friends to give it a try. Listen, let's get right into it. I couldn't be more excited. We have gold at $3,100. You put out a PEA here recently on your Mercur project in Utah. A project, by the way, clearly it's in the US, it's in Utah. It's got a expedited timeline for permitting. It's a brownfield site, and at $3,000 gold, that project alone, I'm excluding Bear Trek Arnett, which I love, but that project alone has an NPV at today's prices of just shy of $800 million and a 57% internal rate of return. Here you are trading at about a tenth of that. And so, look, you've had a good run the last couple of days. I sent a note out to subscribers yesterday, basically saying this one is simple, it's easy, buy it and sell it for more later. Can you talk to me about that PEA and the upside? Because I get really excited about the upside.
It is simple, it is straightforward, and it's really exciting to have these results out for your audience. Gerardo, you remember, step back almost a year ago, we purchased the Mercur project through the purchase of a private company, little known private company that did all this legwork, putting the property position together. We came along, we were able to fund the effort to complete metallurgical test work, do the engineering, remodel the geology, and the output in a $3,100 gold price environment is, as you described, pretty spectacular here. Almost 100,000 ounces a year of potential gold production over a 10-year mine life, and you know, $1,360 AISC costs, which is very competitive relative to our peers, all for a capital cost of about $208 million. All up, and again, very competitive relative to our peers, sitting in at about $220 an ounce of gold production. This is really exciting result, and what makes it even more exciting is that our team's been able to come up with a permitting timeline which sits at just 2 years because of the fact that we're on private ground and because of the fact that we've got the infrastructure to benefit the project. Again, really exciting result, but it all sums up to that $750 million NPV at $3,000 gold and that 57% after-tax return that you were talking about.
I couldn't be more impressed with the numbers. We're sitting at 3160 gold. It looks like with the fiscal, monetary, and geopolitical volatility that we have, that gold is the safe haven of choice. I'll speculate and I'll guess, and I'm doing it with my wallet, that gold is going a lot higher. The leverage here is phenomenal. I would be not doing my audience a service and a courtesy if I didn't ask about Bear Trek Arnett, because that project on its own, in my mind, is worth a whole heck of a lot more than the entire market cap of Revival Gold as it stands, and that's excluding the $752 million NPV on Mercur. Can we speak to Bear Trek Arnett here in a bit? But first, tell me more about the upside at Mercur as it relates to expanding that resource.
Well, this is a Carlin type system. These are the big gold systems that the majors own in Nevada and that are so valuable to those companies. They lead to discoveries like 4 Mile, Cortez Deeps, these high grade discoveries at depth. And what we know about the Mercur system in particular, with 2.6 million ounces of historical production, is that it also produces high grades. Almost 1 million of those ounces were at 7 grams per ton gold. We haven't yet pursued the high grade potential in this deposit. We are focused on open pit heap leach material within 150 meters, call it 500 feet of surface. So very close to surface, very straightforward to mine, relatively low risk. But gosh, there's a lot of potential beyond that. And our geologists are itching to get out and do more drilling, and continue to increase the scale of this project. It's a rare find. These kinds of deposits do not generally sit in the hands of a junior for very long. They tend to be very prolific, and we're really excited about the ongoing potential.
Well, listen, I know that Dundee Corporation recently took a strategic stake in Revival. I think their timing was excellent. I think they're looking pretty brilliant right now. Can we talk a bit about the interest from, I'm going to assume that mid-tiers are all over you right now. And I know you likely can't comment too much on specifics, but can you talk a bit about the interest and the calls that you're getting and the traffic relative to how it was a year ago, right? What a difference a year makes.
Yeah, a year does make a difference. I think what we're seeing is a lot more confidence out of the intermediates and the senior gold companies. I mean, they're just making a ton of cash flow here. Somewhere between 6 and 14% free cash flow generating, from the majors and the intermediates in the last numbers that I've seen. And so they're feeling very confident. They are active. And we invite the interest. I mean, we're happy to have smart geological teams diving into our data. We're busy populating our data room with all the details from the PFS out of Mercur. That'll take place over the next month or month and a half. And we'll continue to entertain interest in the project from both corporate and financial partners as we think about next steps for Revival Gold. You did bring up Bear Track Arnett. I want to mention that it very much is part of our business going forward. If you aggregate up the NAV on that project's first phase heap leach project with what we have now from Mercur, we're talking about $500 million worth of NPV at a more modest $2,175 an ounce gold price. It increases from that $500 million to $1.2 billion at $3,000 gold. So talk about leverage, talk about ounce exposure. These are pure gold ounces. This is not a gold equivalent situation, and all in the domestic United States in good Western locations. So look, we've got a ton of leverage here, not just from exploration at Mercur, exploration at in our Bear Track Arnett project, our founding asset in Idaho, but from this gold price pickup and the exposure that we offer in current mine plans under PFS and PEAs in the market now.
We've waited a long time for this gold bull market. I've personally now known you, I think, for over a decade, Hugh, and I've been waiting for you to have the kind of market that we have now, for you to do what you do best, which is monetize assets, add value, and negotiate. And you could do that with the best of them. You and the team obviously have done this before with your background. I'm excited for the company moving forward. I can't wait to see what 2025 brings. Anything you want to add to that, Hugh?
We're appreciative of the support and the enthusiasm, and boy, timing is everything here. I think we've done the legwork. We've got a lot more work to do, no question about that. But we're starting to see that show up in our share price, and ultimately, that's what we're here for, our investors.
Hugh, thank you for your time. Look forward to doing it again. Chat soon.
Thank you, Gerardo.
Cheers, sir. Hey everybody, Gerardo Del Real here. If you're enjoying the content that you just saw, you can let us know in 3 simple steps. Hit the like button, hit the subscribe button, and please share across your network and on social media. Take care, everybody.